Volatility is the entrance fee to returns. It seems like you're getting free returns, but you're actually dealing with volatility. Like a lot of people are going to come up to us later and they're going to say, oh, you got lucky. You got to Bitcoin early. But they don't quite understand that we didn't get lucky. We went through all of the volatility. That's the pain. Bitcoin's going up. It doesn't care. It doesn't care about feelings. It doesn't care about thoughts. It doesn't care about which politician is into Bitcoin. It doesn't care about which politician hates Bitcoin. It doesn't care about if Jeffrey Epstein created Bitcoin. None of that matters. All that matters is that people want it, and it's the best store of value in the world. I had MSTR, and I thought, oh, this guy's just diluting the stock. But once sentiment picks up again, I think strategy is probably going to go much, much higher and much faster than Bitcoin does. So I still own the stock. I have it in a locked-in retirement account. I know that I'm giving control of my money to somebody like Michael Saylor. I understand his vision. I see his vision. Most people don't see it. And I'm okay with what he's doing. All you need is Bitcoin and cash. You don't need stocks. You don't need real estate. You don't need bonds. You don't need any of that. All you need is cash and Bitcoin, because cash is the most liquid. It's the least volatile, whereas Bitcoin is the most volatile.
Hey everybody, Tyler Rowe here, and today I'm joined by Rajat Soni. Rajat is a former accountant and asset manager, a CFA charter holder, and is educating the world about the value prop of Bitcoin. Rajat, welcome to the show.
Thanks for having me. I really appreciate it.
You got it, man. So you worked in traditional finance earlier in your career. Can you walk our viewers through, I guess, first of all, what was the moment Bitcoin clicked for you? What made you kind of go all in on this thing?
Yeah. So I used to work in financial services. I was working in a brokerage. I worked at a couple of brokerages. I worked at the branch level, so let's say with customers directly, like a financial services rep. That was like my first job in banking. And then over time, I grew and I kept trying to climb the corporate ladder. Eventually, I was working at the end of it. I was working as a fixed income analyst at TD Asset Management, and the job was okay, paid well and all that. But I felt like I felt like there was something missing. I felt like there was no real fulfillment, because I'm just basically helping people manage their portfolios. These are like people who have $100 million, family offices, pension accounts, whatever it was, like insurance companies, small insurance companies in the U.S. The portfolio that we were managing was worth something like $4.5 billion. And it was interesting because the way that now that I look back at it, it just makes me think, what was the point of what I was doing? There was no real value to it. I was helping, let's say, somebody already has $100 million to gain 1% on their cash balance. So they have other investments as well. Like this is like nothing to them, and they're just earning a tiny, tiny amount of interest on it, and I'm getting paid nearly nothing to do it compared to like what they're earning. The bank is making so much money off it, and it just made me feel like, okay, I can't do this anymore. I felt miserable. I hated it. And the lockdowns actually really helped me because I had more time to myself, and I got to start really studying personal finance and investing. And keep in mind, I already had my CFA, but I was more doing it to get a job. I wasn't doing it for my own personal reason. I wasn't thinking of it like, oh, this is how I should invest my own money. And I think that really helped, because if I had invested my money the way that the CFA tells you to, I would probably be doing really well, and I wouldn't have even looked at Bitcoin. So I was doing terribly, and it worked out for me, because basically what the CFA is it's teaching you the rules of the financial system, and then you can help other people to do that as well. So it worked out well that I was a terrible investor. I was trying to basically get out of the rat race, 0 days to expiry options, just stupid decisions all around. And then during the pandemic, I kind of started learning a little bit more about index funds and really investing properly. And at that point, I thought more about how I can't really do what I'm doing. I hate it. I feel miserable doing it. So I want to help real people. And there was a podcast from Naval. Do you know who Naval is? Naval Ravikant. So he has a podcast, like 4 hours. It says How to Be Rich, or that's the title, something like that. I highly recommend your audience to go listen to it. Really great. It triggered me into taking action. It got me to start doing something, because he mentioned at one point 3 or 4 forms of leverage. So one is other people, where you can have other people work for you. You can pay them. Another one is money, capital. So you can deploy capital. You can use that to leverage your existence, and you can create more value. You can control other people's assets and all that stuff. And then the third one is the internet. So the internet is basically a way for you to leverage your uh, content and get more attention. So basically, there are people who are making money in all three of these, and the easiest one, the one that has the lowest upfront cost, is the internet. So I started posting on Instagram about personal finance. I was really interested in. I was just listening to personal finance podcasts like while other people are watching TV, watching Netflix, and that was like my fun, my the thing that I did to blow off steam. I'd go to the gym and I'd be listening to a personal finance podcast. So to me, it was like, okay, I can create this content forever, and I can help so many more people than working at the bank. And I started creating content while I was at the bank for like maybe 6, 7 months. And then I started finding other ways to make money. So one of those ways was to be a real estate agent. I started doing real estate. I did it for about a year. I did pretty well. I got really lucky though. It was like the top of the market. And but I mean, I didn't really like it either. I didn't really want to deal with people. It was more like the other ways of leverage that I mentioned with Naval. So you're using other people's money to make money for yourself. I didn't really like it. I wanted to take more control of my time. A lot of people waste your time. They ask you for showings and they'd have no intention of buying and all that stuff. So it was, I hated it. It was stressful. It just felt like I needed to be somebody who I wasn't. And then I started creating more content. I started going deeper into the content, and to sustain my content business, I was doing Uber Eats for a while. And a lot of people ask me, they say, "Oh, you have your CFA. Why are you doing Uber? Are you stupid? You should be working a job." No, they didn't see it from my perspective, and this is something that I think a lot of Bitcoiners can relate with. The people in your life don't see the world the way that you see it. So because of that, you have to ignore the noise. You have to get away from everybody who's telling you don't buy Bitcoin because it's going to zero. It's going to zero. So back to what I was talking about. People gave me a lot of shit for it. People gave me a lot of pressure for doing things that they wouldn't want to do, like getting my CFA and then doing Uber. But it worked out for me because I was able to focus more of my time into helping other people to learn about money. And eventually, by just posting more content, I started getting comments about how inflation isn't actually 2%. It's way more than we think it is. It's way more. It's way more. It's way more. And I finally started paying attention. I saw a post about how Bitcoin is going to 10K. Keep in mind, I think this was near the top in 2021. And then Bitcoin was starting to come down. And somebody said in a story, they said, Bitcoin's going to 10K. This is your generational buying opportunity. It's going to 10K. And keep in mind, at the time, it was at like 60K. I don't remember what the account was. I don't remember anything like that. But whoever it was, props to them. I started focusing more on Bitcoin. And one of my friends actually told me about the Bitcoin standard. One of these guys that I was following, I'm still in touch with him. He posted about the Bitcoin standard. I read it. And at that point, my life changed, right? And people say that, oh, listening to podcasts doesn't qualify you to be educated on something, but that's absolutely not true. I read the Bitcoin standard. I probably read it like 4 or 5 times. I listened to the audiobook, and then I started digging deeper into Bitcoin, and I started asking more questions because I think the Bitcoin standard is just a brief overview. There's so much more. There's so much more that you need to learn. And the Bitcoin standard gave me more questions. So I started asking those questions on Google. I started using AI. But at that time, I think AI wasn't really fully available. So I'd be posting questions on YouTube, on Google, just a search engine, and it would show me all these random videos like Press and Pish or Bitcoin University, Matthew Crater. There were other people as well. I started diving deeper. And while I was doing Uber, this is the best part. So while I was doing Uber, I was listening to probably 6 to 8 hours of podcasts every single day. The Bitcoin Standard podcast from Saifedean Ammous, he goes so deep into all these different topics, 6 to 8 hours a day, and I was basically learning about Bitcoin full time, and I was getting paid to learn about Bitcoin. I loved it. It was amazing. So because of that, my conviction kept growing, kept growing, kept growing. I was actually on a podcast with Simply Bitcoin where I said, "Oh, Bitcoin doesn't compete with the legacy financial system." At this point, I wasn't fully orange pilled. I didn't completely understand Bitcoin, but at one point, I watched a video about real estate and how landlords are just taking value out of the economy and they're not really giving anything back. And it made me click. It was a socialist video. Keep that in mind. So a socialist account. You might have heard of them. Your audience might have heard of them. Second Thought, really great account, really great videos. But like sometimes I feel like the things they say, they don't really make sense. So I reached out to the creator of that video and I said to him, "Hey, Bitcoin is something that you might be interested in," and he blocked me immediately. And that's what gave me the trigger to understand that most people will never understand Bitcoin. Most people will never care about it. So I need to do as much as I can to push people into learning about it. And that's what led me to where I am today, creating content full time, posting on X. And it's just like that the fact that this guy blocked me, it actually worked to my advantage because it made me push the idea more. Because it just makes me think, okay, capitalism is the real way to push society forward. Socialists don't want capitalism. They don't want a solution. They just want to complain about their problems. And I know a lot of people who are socialists, and I started telling them about Bitcoin. And keep in mind, a lot of them actually were open minded to it and they started learning about it. A lot of people, though, did unfollow me on Instagram because I used to post about stocks, real estate, bonds. And then I suddenly flipped to Bitcoin. And I think it was like August of 2023. I sold all my stocks. I sold all my REITs, sold everything that I had, got Bitcoin. And it was the best decision I ever made.
If you're trying to get to the top of Bitcoin Treasuries.net, you need institutional infrastructure to match. BitGo is the digital asset backbone trusted by thousands of institutions worldwide. Why? It offers regulated custody, OTC trading, financing, and settlement all under one roof. They're now a publicly traded company on the New York Stock Exchange and hold a federally chartered national bank license from the OCC. For Treasury companies, it's a must call. This is the infrastructure layer that really matters. Learn more at bitgo.com. It's the best kept secret known by every true Bitcoin OG. CoinKite has been building the gold standard in private key security for years, and they just raised the bar again. The Cold Card Q is an absolute powerhouse for serious Bitcoin treasuries. We're talking a full QWERTY keyboard, air gap protections, and it's built for maximum security. The brand new Cold Card MK5, it has a massive Gorilla Glass screen and new NFC functionality for an even more seamless experience. So if your business is large or small, there's a cold card for you. Head to store.coinkite.com and use the code 6BT at checkout for 6% off. Stop cutting corners on your Bitcoin treasury. You wished for it. Bitcoin is finally on sale. And if you're sitting on BTC and want liquidity without dumping your stack, Arch Lending can make it easy. You can get USD or USDC in minutes, and your collateral stays in qualified custody. They never rehypothecate your assets. As your assets move up and down in value, you can scale your credit line instantly or pull collateral back when the market runs. If you need help, you get real humans 24/7, not bots. This is Arch Lending. Simple tiers, public pricing. You can check them out at archlending.com.
Amazing. What a cool story, Raja. Yeah, that's super incredible. I get a million questions now. But yeah, something that really struck me is that, you were out there Ubering and as you said, you're getting paid to learn about Bitcoin. I mean, how cool is that, right? Talk about like a decision that has just paid dividends for you. Well, you had family and friends probably criticizing you, but I think that is something a lot of Bitcoiners can relate to, is having that pushback from the people in their circle. And not everyone's gonna. Everyone gets Bitcoin at the price they deserve, and I think it is a big hurdle sometimes to get that message out there. I do want to touch on, if I remember your story correctly, the CFA Institute or an institution that granted your charter got some complaints about your Bitcoin content
Yeah.
early on and kind of went after that. Can you tell us what happened there and refresh my memory?
Yeah, absolutely. I made a full video about it, just going into the details, showing the emails. But basically, what happened was I think somebody complained about my content. I had a post, and they specifically sent that post to the CFA Institute, and I don't think they quite understood what I meant. This is back when Bitcoin was probably like 60K, maybe a little bit lower. And I said Bitcoin's going to 100K, then it's going to a million, then it's going to 10 million, then it's going to 100 million, then it's going to a billion. It's going to go on higher and higher forever. And then I explained basically the mechanism of Bitcoin price is determined at the margin, where the price is determined by the buyer and the seller at any time, and they can agree to any price. If there's no Bitcoin available and some buyer really wants to buy some, they can offer as much money as they want to. and they can bring more buyers to the market if there aren't enough, or sorry, they can bring more sellers to the market if there aren't enough sellers available. So I explained that, and this person shared that post with the CFA Institute, and I think they quite didn't understand it either, because keep in mind that in the entire time that I was doing the CFA, um, the curriculum, they briefly touched on how market mechanisms work, right? Like the pricing. They don't really talk about, like, they don't go in depth as I did with learning about prices determined at the margin after the CFA. So keep in mind that the people who are writing these complaints and they're sending me emails, they don't quite understand it from that perspective either, because all they know is the CFA curriculum. And the CFA curriculum has never challenged the US dollar. That's the point. The point is to keep the dollar working and to hire more workers who will keep the public invested in the US dollar financial system. That's the goal of the CFA Institute. So I was doing something that was completely different. I know there are other CFA people who completed the CFA who talk about Bitcoin, but I don't personally know anybody who's as vocal about Bitcoin as me, and they have the CFA charter. So the CFA Institute asked me what my thoughts are on this, why I think this, what's my basis. So I sent them a couple of my YouTube videos. I had a webinar. I was charging like $50 for it, so I sent them that link to the webinar. You can watch this if you want to learn more about it. You can pay me if you want to learn, but I'm not giving you like 5,000 hours of education or whatever it is. Like the way that I look at it, my Bitcoin education started when I started working in the financial system, when I started earning money. And that was back like when I was 12, because your mindset is developing over time. Your mindset is developing. The the total amount of time that I spent on learning about Bitcoin and really putting myself in that perspective to truly understand it has taken years. It's taken over a decade, because even though I didn't even know about Bitcoin, I had to, like, that was the foundation that brought me to Bitcoin. And I have to teach these people all of that. I can't. So they asked me what my basis is for Bitcoin. I asked them, what's your basis for the S&P 500? And they didn't really have a response. I think they escalated the issue to one of their heads, and the person said, hey, we're okay with you talking about it. Just make sure that you say if something's your opinion versus something is fact. And I'm okay with that. Completely okay with them asking me to do that. It makes a lot of sense.
Mm-hmm. Yeah, it's funny you got pushback and a complaint for explaining how free markets work, but
Yeah.
that's a commentary, I think, on just the state of affairs today. And there is so much obfuscation for I would say just ordinary citizens who aren't tapped into financial markets as much as their day to day in understanding how markets work and understanding investing. And there's so many movements out there that are trying to educate people, and I think when we're in this fiat driven world, you are constantly looking for ways to either financially engineer or for assets, harder assets that perform well regardless of fiat debasement. Why do you think it is that so many people who might recognize the problems with the financial system don't get Bitcoin in the way that you and I might?
I think a lot of people are looking at it from the wrong perspective. This is the way that people look at money. This is the way they should be looking at money. And I think that they're looking from a different perspective that's not accurate. They're trying to value it based on, let's say, stocks and real estate. So can I just share my screen? Okay, so this is basically just a spreadsheet that I compiled of all of or is a spreadsheet that shows a compilation of all of the formulas that I could think of. I mean, there are probably others that I stopped adding at a certain point, but you can see here, these are the ways that the legacy financial system values stocks. So it values stocks based on discounted cash flows. It values them based on PE ratio, so price to equity, or price to earnings. Um, there's EBITDA, so enterprise value to EBITDA, enterprise value divided by earnings before interest, taxes, depreciation. And keep in mind that all of these are basically a way to value a company that's producing a product that has a centralized authority. And these companies are selling that product to create cash flow. If you're valuing money based on how a company should be valued, then you're doing it the wrong way. And again, most financial most of the financial industry hasn't figured out that Bitcoin isn't a business. They still think Bitcoin is a stock or something. Like they're still so far behind. They think, oh, Bitcoin is a business because it sells BTC. Like it's just like the stuff that you hear is just absolutely insane. And then we have other people comparing Bitcoin to real estate. Oh, you can't live in a Bitcoin, but you also can't use real estate as a medium of exchange or a unit of account. So Bitcoin is not real estate, of course. It has different functions. And then again, people will try to look at, oh, Bitcoin doesn't provide income. Bitcoin doesn't provide sales. It doesn't have this. It doesn't have that. You can't live in a Bitcoin. And it's just all these people are just looking at Bitcoin the wrong way. And I was part of that. I was part of that group. I used to see Bitcoin as I was always surrounded by cash flow. I was surrounded by yields. I was surrounded by people trying to sell their bonds. Like that was the industry that I worked in. And getting out of that was what helped me. So I think that if the financial professionals who are looking at Bitcoin from this perspective, from the perspective of valuing stocks and real estate, if they get out of that, they'll finally be able to see what they're missing. And what they're missing is that Bitcoin is money. That's it. Bitcoin is money. It's not a stock, it's not real estate, it's not a house, it's none of that. It's money. Its functions are very specific. If anything, I think the world will just look at Bitcoin as the only thing that has to hold value. I don't think we'll use real estate and stocks as savings accounts anymore at some point. If we go to a Bitcoin standard, I think that's going to happen. And the reason for that is that right now, people need to find something that they can save with. They can't save in fiat currencies. They can't save in government issued currencies. So they have to find assets. They have to find, let's say, gold, precious metals, stocks, real estate. They have to buy all these assets to save because the functions of money have been separated. So right now, we have multiple assets that fulfill the store of value function, but they can't fulfill the medium of exchange and unit of account functions. And then we have the medium of exchange and unit of account. Some people are financially illiterate and they don't understand that you can't use the medium of exchange and unit of account to store value. So what they do is they save in fiat currencies and they don't realize that there's no limit to how much of them can be created. So I create these charts and I create a lot of these just spreadsheets to explain my thoughts and how I look at things. This is something that a lot of people, or sorry, not this one, but this is something that a lot of people seem to miss, the characteristics of money. And this is built off of an idea I saw on the bullish case for Bitcoin, the paper, The Bullish Case for Bitcoin, where he explains gold versus US dollars versus Bitcoin. But I added some other assets to it. So I added altcoins, I added Birkin bags. So every time somebody tells me, hey, Bitcoin is like this, or Bitcoin is trading cards, or Bitcoin is tulips, I add them to this list and I try to explain like, okay, comparing Bitcoin to tulips is stupid because it doesn't have any of the characteristics of money. Comparing Bitcoin to trading cards is stupid because it doesn't have the characteristics of money. And again, like back to the question that you were talking about, artwork, real estate doesn't have all the functions of money. Back to the question you were talking about, why is it that people are missing this? Why is it that the financial industry isn't figuring it out? It's because they haven't looked at Bitcoin as money. They look at Bitcoin as a stock. They look at Bitcoin as a way to earn money in the future, or that's the current value of all the assets we have. That's how we value assets and their ability to produce value for the future. But again, that's been wrong because gold has outperformed everything in the last little while. And I think because of that, the world will figure out that Bitcoin has all of these characteristics. And I think the financial advisors will figure it out. And I think that every investor will figure it out and they will want to move from stocks and real estate into Bitcoin.
That's a really cool spreadsheet there, Raja. I love it. And I love how it's growing and evolving as people come out with more FUD or more poor comparisons to Bitcoin as money. And that really is a big unlock. Is in Western culture, we don't think a lot about money. We don't learn about it in school. We don't learn about the history of money. I've got this book, Broken Money, behind me by Lynn Alden, a great one, right? And it, I think that should be essential reading for every fifth grader, but being able to understand how money works was an unlock. I think back to my own Bitcoin journey. The first time I bought Bitcoin, I was predisposed to understand it from like my political leanings as a libertarian, but I saw it as a meme, and I didn't even understand that it was money. I didn't do research. I was gambling. I was speculating when I first bought Bitcoin, and then I eventually sold Bitcoin before I really did my due diligence and started to understand more and more what money was. Just thinking about that, do you think there's going to have to be some sort of uh, calamity in the Western world with money for people to more understand money? Do you think it's just more people like you getting out there and educating their friends, their neighbors, people online, that's going to allow people to understand Bitcoin? I mean, Bitcoin is a great tool to be able to educate people because it's like a launch, it's a springboard, it's a launching point into talking about money. But you know, is it just because it's so ingrained in us that we need to speculate on all these assets? Which, I mean, speculation is very, very close to gambling in some respects, and because of the nature of Western society, because of the nature of the internet, we're able to speculate on so many assets. But what do you think turns that around, and how do you think Bitcoin in this new, more Wall Street integrated phase can progress and can penetrate more into the minds of people? I'm sorry, I'm kind of riffing here, but I hear a lot of people saying that the retail era of Bitcoin might be over, and 90% of the people in retail who would have understood Bitcoin should have or would have understood it by now, and now it's going to be just kind of forced upon us as hedge funds, as mutual funds, as Wall Street types accumulate Bitcoin. People are gonna automatically get exposure. But yeah, what do you think it takes in this next phase of Bitcoin for people to understand Bitcoin as money?
So I think that this is the Bitcoin Treasury podcast. So I think that Bitcoin Treasury companies like Strategy, what they're doing is what's going to push people towards Bitcoin because they have STRC stretch, and they're literally just fulfilling everybody's demands. Like everybody wants a savings account that pays them 11.5%. That's it. Like Strategy hasn't paid me to say that. They're offering this. They just started offering the best product in the world. It's like word of mouth. I think word of mouth is the best thing that you can have as marketing. So let's say, for example, if somebody, let's say, for example, we have iPhone, we have Apple. They fulfilled people's demand for a sleek phone that did more, and now they have like 50% of the market share of cell phones. It's because they had the best product in the world. And I think that strategy is doing that with STRC. Their other products are great. I haven't done the full deep dive into them, but STRC is just so attractive to me because what people want is stability. That's what people want. They don't care about self-sovereign money. They don't care about censorship resistant. They don't expect to have their money taken away from them. So they don't care about any of that. What they care about is getting a decent return on their savings and being able to just live their life. And that's exactly what STRC is doing. So I think what's going to have to happen is maybe more issuers of products like STRC are coming to the market over time. And maybe over time, STRC um, is able to pay out daily dividends, and it attracts more people. And I think that could be something that just adds up over time, and it pushes this wave of money into Bitcoin that otherwise wouldn't come in. Because a lot of people, like you said, a lot of the people who wanted to understand Bitcoin, they probably already understand it. But I think there is more. There's always room for more content creators. There's always different perspectives. There's always different ideas. There's always different ways of saying things, and more people can relate to more Bitcoiners if more Bitcoiners created more content. So the way that I look at it is, my audience may not like another Bitcoin content creator. Another Bitcoin content creator's audience may not like me. So there's no real competition. We're just trying to push the world towards Bitcoin, and we're trying to teach people how Bitcoin works by improving their lives. So more content creation, I think that's key. That'll probably push more people into self custody Bitcoin, and I think that the treasury product like STRC, the Bitcoin Treasury Company product, I think they're going to push more people into thinking about Bitcoin as well, because people are going to start wondering, hey, where's the yield coming from? And then they're going to dig deeper, and everything is transparent. That's one of the greatest things about Bitcoin. That's one of the greatest things about what strategy is doing. The yield is all transparent. You will get paid because they have a $2.25 billion cash reserve. You're like, for the next 2 years, you're going to get paid. And then they have like 50 years worth of Bitcoin to pay their dividend. So as people figure this out, they're going to start saying, why am I buying STRC for 30 years to get an 11.5% return, whereas I could buy Bitcoin and I can get a 25% return? And that it's just, people will start. I mean, maybe I'm thinking of this wrong, but the way that I look at it, it is game theory. People will do what's best for them. Right now, people are doing what's best for them because they're getting an 11.5% return. And then after a couple of years, they're going to see, oh, this guy keeps paying the dividend. How is he paying it? Where's the yield coming from? And other companies will start digging deeper. How is this guy doing it? And again, that's going to bring another wave of a massive wave of capital into Bitcoin. And that'll just happen over time. I think it'll probably take, to be honest, I think for real adoption, as I study Bitcoin longer, as I'm in Bitcoin for longer, I just I think I've kind of lost hope for the average person. I don't think the average person wants to deal with volatility, even though it could be the best thing that could happen to them. So I think it could take decades for the average person to really start interacting with Bitcoin, or maybe the average person will never interact with actual Bitcoin, and they'll interact with proxies like IBIT or MSTR or STRC.
If you're building or managing a Bitcoin treasury, you need institutional infrastructure to match. BitGo is the digital asset backbone trusted by thousands of institutions worldwide, offering regulated custody, OTC trading, financing, and settlement all under one roof. They're now a publicly traded company on the NYSE and hold a federally chartered national bank license from the OCC. For Bitcoin treasury companies, this is the infrastructure layer that matters. Learn more at bitgo.com. CoinKite has been building the gold standard in Bitcoin private key security for years, and they just raised the bar again. The brand new Coldcard MK5 brings a massive Gorilla Glass screen and new NFC functionality for a more seamless experience. The Coldcard Q is an absolute powerhouse for serious Bitcoiners, with a full QWERTY keyboard, air-gapped, and built for maximum security. Whatever your setup, executive, Bitcoiner, Bitcoin Treasury, there's a cold card for you. Head to store.coinkite.com and use code 6BT at checkout for 6% off.
The dip is here, and with it, you might be thinking, is it time for me to borrow against my Bitcoin? Enter Arch Lending. They're building the most transparent borrowing experience in crypto. We're talking industry-leading rates from 8.49% when you borrow against BTC, and you receive USD within minutes. Your assets stay protected with qualified custody. There's no rehypothecation, and verifiable segregated addresses are used always. As your collateral grows, you can unlock more liquidity, adjust your line anytime, and extend your term with a single click. And with 24/7 white glove support, you're never going to feel like you're on your own. Arch Lending, simple terms, public pricing, market-leading rates at every size. You can learn more at archlending.com.
Yeah, the volatility is a hurdle, certainly, for people who aren't used to it. What do you think makes Bitcoiners, or what makes you specifically able to endure that volatility, to be able to not lose sleep over an asset that may crash 20% in a day, in rare cases in its history? Is there something different? Are we wired a little bit differently, Rajat?
I think that it's partly, I think so. For me, it was, I don't know how you got through it, but for me, it was just reading. There's this book called Psychology of Money, where the writer says something along the lines of volatility is the entrance fee to returns. Like, the market it seems like you're getting free returns, but you're actually dealing with volatility. Like, a lot of people are going to come up to us later and they're going to say, oh, you got lucky. You got to Bitcoin early. But they don't quite understand that we didn't get lucky. We went through all of the volatility. That's the pain. And once you understand that so something that worked for me is, I had to understand that nothing that's going to grow is going to grow in a stable line. Like, it's not going to just go straight up. Nothing ever, that doesn't happen to anybody. Even if you apply it to, let's say, your career, you're going to have days where you hate your job. You're going to have days where you love your job. There are going to be days when you feel like moving up. There are going to be other days where you feel like, I can't do this anymore. And it applies to relationships. You're not always going to be best friends, even with your wife, your whoever your partner is. You're going to have arguments. You're going to fight, but those days aren't the defining days of the rest of your life. And that's exactly what applies to Bitcoin. The volatility is always going to be there. Even in our day-to-day lives, we have volatility. We have days where we hate ourselves. We have days where we feel like, oh, I didn't do anything this day. And then we have other days where we're like, oh, I was really productive. And you look back and you think, oh, I did a lot over the last few years, but I didn't like in the moment, it didn't feel like much, but over time it accumulates and it compounds into something really big. And my sister-in-law's had kids, and I've been watching them grow up. And one of them was like, she was a blob for like 6 months. She couldn't do anything, right? And then suddenly she starts standing up on her own, and then suddenly she starts running around. And that's it doesn't happen. It doesn't happen in a linear fashion. It's compounding over time. Like you'd think, oh, it took this baby 6 months to stand up, so now it's going to take this baby 6 months to take her first step. No, it doesn't work that way. 6 months to stand up, that was the foundation. That 6 months was the foundation, or like 8 months, whatever it was. That was the foundation. And that's exactly what's happening with Bitcoin. Bitcoin is not going to go straight up. The price, the day-to-day price is just showing you what the emotions are at that time. It's just it's a billboard for how people are feeling towards Bitcoin right now. Right now, they're not feeling as great as they were when Bitcoin was at 126K. Now they think, oh, it's going to zero. Now people think it's going to zero, but people are paying attention. I think that's the key here. Focus on the day-to-day. Just keep stacking Bitcoin, keep buying. And I did some math on this. Keep buying. Just focus on the day to day and let time take care of the rest. That's the key here. I'm just going to share my screen here again. I just want to show something that I think a lot of people will find valuable. If there's a lot of people here who are new to this, who are worried, this is a chart that shows you if you had bought $150 worth of Bitcoin every week since 2021's all-time high of 69K. So if you had bought at 69K, then you kept buying $150 worth every single week. This is the number of Satoshis that you would have bought. So you would have bought, let's say in February of 2022, you would have bought 347,000 Satoshis for $150 when Bitcoin was $43,200. And now those Satoshis would be worth $242. So this adds up. And there are times where, let's say July of 2022, you bought 753,000 Satoshis for $150. Now it's worth $525. So you'll see here that there are times also, let's say November of 2022, you bought 909,000 Satoshis for $150, and now it's worth $633. So if you had just kept doing this, a lot of your buys would have been in profit. Other buys would have been at a loss. Like you can see here, there are some buys. What was the highest price? So it was October. Oh, here, October of 2025. You would have bought $150 worth of Bitcoin, 119,000 Satoshis. Now it's worth $83. But the cumulative effect of all these compoundings and all these, all of this accumulation and just you continuously buying, Bitcoin is only up 1.03% in that time, but your portfolio would be up 69.75%. That doesn't feel like a lot, but you would have been up more than if you had bought the S&P 500. So in that same time, like compare these, think about these numbers. In that same time, Bitcoin is only up 1%. The S&P 500 is up 40%. But if you had accumulated Bitcoin in that time every single week, you'd be up 70%, 69.75%, whereas the S&P 500, your portfolio would be up 31%. So think about that. You would have accumulated Bitcoin, even though it did nothing, you'd be up 70%, whereas with the S&P 500, it did a lot. It was up 40% in that same period. It's up 40 times what Bitcoin was up, and your return would be smaller. And that's because of the volatility. So the volatility works to your advantage. Use it to your advantage. Keep accumulating. Focus on the day-to-day actions that you can to create more value for other people. Let's say you can only earn $20 a day that you can put into Bitcoin today. Find a way to earn $40 a day. Find a way to earn $60, $100, $150. Do whatever you can to increase your income. Eventually, your Bitcoin will be worth a lot more. So let time take care of everything else.
Yeah, Really well said. That's cool stuff on the weekly Bitcoin buys. And, I think that is something, once you understand Bitcoin, is you do become more motivated that, I'm never going to have enough Bitcoin. So you do find those ways to work harder, to make more money, to earn more money, so you can acquire more Bitcoin, depending on the stage of life you're in, certainly. But, it's your words about, the conviction and learning about Bitcoin remind me of something somebody said recently on the podcast, is that conviction is earned, not learned. And you can do all the learning you want. And I think that's an important part. But until you've been through some of that volatility, you can't properly understand it. And Bitcoin's going to teach you that. Bitcoin's going to teach you that real quickly. I want to touch back on stretch, sorry, from STRC from strategy. You mentioned that its big attraction is that it's an 11.5% savings account, which basically the whole world needs, right? And I was talking to some doctors at Strategy World, and they said word of mouth is going to be the way that we teach people about Bitcoin, because we're going to be like, hey, what's your savings account paying? 2%, 3%, your money market? Well, mine's paying 11.5%, and that opens up the conversation immediately, right? You've got people in Bitcoin across all walks, all professions, but now that Strategy does have this product that is paying monthly dividends, and they raised billions of dollars with it recently. Michael Saylor also recently announced that they're going to raise they've authorized $21 billion of more share issuance for Stretch. So that's super, super exciting news. How quickly do you think Stretch is going to scale? One of the pushbacks I've heard is that products like this might take some seasoning of 2 to 3 years before larger funds are comfortable in allocating more capital. But in the next Bitcoin bull market, I just think Strategy's going to accumulate so much more capital to purchase Bitcoin. It's going to get crazy out there. What do you think about the scaling of Stretch, Rajat?
I think it's going to get insane. Why would, think about it, with money market mutual funds, there are $8 trillion in those funds, and they're paying like 2 to 3%. I was looking at, so one of my friends told me that they want to sell a rental property, and because they just don't want to deal with it anymore. They don't want to deal with the tenants. And what they're going to do is they're going to buy a GIC. So a GIC is basically like a CD. A CD is a certificate of deposit. GIC is a Canadian version. It's a guaranteed income certificate. And all it does is you put your money into it, you park your money in it, and it gives you an interest rate. And if you lock your money in, they'll give you up to 3.75%. You have to keep your money in it for 5 years, and they'll give you 3.75%. Whereas with STRC, you buy it, you can get your dividend. A couple weeks later, it'll be back to par. You can sell it, and you're good to go. You just pay the taxes on the dividend. That's it. A completely different idea, completely different way of thinking. But most people don't see it that way. What most people see is, I have a high yield savings account. I can take my money out at any time, and it'll give me 3%. I have a checking account. I can use my money whenever I want to. It gives me 0.1%. That's what they see. I think that people are, so that's actually one thing that I've noticed. So on Instagram, like I said before, people don't want volatility. They want stability. They want to be able to pay for their expenses. They want to just live their life. The average person doesn't care about, I'm going to keep improving myself. I'm going to keep getting better. I'm going to keep doing this, and that to make more money. What they care about is, I work a job, I work 40 hours, and I want my 40 hours of income to just pay for my life. And what they can do is, because of Bitcoin, they can buy this product, STRC, and they can put their income into their excess income. They can put it into STRC, and then they can get paid forever. They're literally just buying an asset that gives them income. They're buying income. That's what people say for real estate. That's what people say for dividend stocks. That's what they're doing with STRC as well. You're buying income. So you put money into, you earn your money once. You put in the active time and energy to earn that money once, and then you put it into STRC. I'm not telling people to even buy STRC, but this is the way that people think. You put that money into work once, and then you buy STRC, and that STRC will pay for your expenses for however long you hold it. That's it. And there are formulas that show you how much STRC you need to retire. So let's say, for example, what you would do is, if you have $50,000 of annual expenses, divide $50,000 by 11.5%, 0.115, and now you know how much money you need in STRC to pay for your $50,000 worth of expenses. But then you can account for inflation, let's say 5% inflation. How do you account for that? How do you reinvest your income? That's actually what a lot of people talk to me about. I do one-on-one meetings with people. People book meetings all the time. That's what they want to talk about. They want to talk about how to become financially free. And I think it's so interesting that STRC is a product that does that. And MSTR came out with it, and people still think it's a Ponzi scheme, it's a pyramid scheme. But I think people will figure it out over time that the average person, that's all they want. They just want cash flow. And MSTR fulfills that function perfectly. I think I heard somebody say that this is MSTR's iPhone moment, and I couldn't agree more.
Yeah, it's. I think it really is. Michael Saylor said that, or Fong Li at least
Oh, there
has
you go.
certainly said that stretch is their iPhone moment, and all the steps along the way, from sweeping their cash flows into Bitcoin by going out there and getting traditional debt, by getting convertible debt, and then issuing each of these preferreds. It was a gradual process before strategy even figured out. As smart as Michael Saylor and his team are, and as much as they may understand Bitcoin and finance, it took them a while to get to that point, to get to a product that I think is really their crown jewel, and something that's really drastically going to change finance. And we don't even need to see that $8 trillion in money market funds all move into stretch for it to have a huge impact
Yes.
on strategy and Bitcoin's price. If just a couple percent flows into stretch, that's going to have massive impacts on the margins of taking Bitcoin off of the market. So,
Yeah,
y-
1% would be like $80 billion. That's
yeah,
crazy. That's
it's
wild.
insane. That's larger than most 99% of public companies.
That's larger than
Um,
MSTR today.
you're right.
Crazy. Wow.
Yeah, it's absolutely incredible. And I think we do. The longer you're in Bitcoin, you do have this kind of air of inevitability, right? It seems that Bitcoin is inevitable because more and more people are just going to understand it. Of course, the bearish case would be that fewer people understand Bitcoin in the future because it is a fixed supply of 21 million Bitcoin. So it would take more people selling into the marketplace, which just seems like we're still in such early days, Rajat. What are some things that would be bearish for Bitcoin over the long term? We had the political landscape in the United States has changed a lot in their posture towards crypto generally, but definitely Bitcoin. We've got regulators who are thinking about Bitcoin with a lighter touch. We've got administrations, people all through the executive branch that seem to at least understand Bitcoin on a surface level, if not on a much deeper level. Is the landscape in Canada going to follow in the footsteps of the U.S.? So I guess that's kind of a two-parter. What do you think would be bearish for Bitcoin adoption in the future, and as it relates to Canadians, is it a different landscape entirely?
So I think let's answer the first question. What would be bearish for Bitcoin? So number one, probably be, you probably heard this before, if governments start being responsible with their spending. That's not going to happen. That's the first one. What are the chances of that? That's probably the main one. And the second one would probably be if we could find a way to digitize other assets. Like let's say, for example, we found a way to make gold digital, but that would completely defeat the purpose of gold because gold is an industrial metal. So if we found a way to put gold on the internet, I'm not talking about tokenized gold, what Peter Schiff says. I'm talking about actual like digital gold where the value is on the internet. I mean, that's not going to happen either. What are the chances of that? I think that tokenized gold will probably just be the next biggest scam that people will fall for, and that could be extremely bearish as well, because people will just assume that, oh, tokenized gold, it's digital, so that means anything digital is a scam, and maybe people will start thinking that way. Maybe they won't want Bitcoin because of that. But I mean, at the end of the day, the people who have studied Bitcoin always want more. I don't think I've ever met somebody who has studied Bitcoin and doesn't want more. Like Saylor has 760,000 Bitcoin and he keeps buying. He's creating more products to buy more Bitcoin. So it doesn't really matter if the average person doesn't understand Bitcoin. To me, I don't really. If they don't want to put in the time, then that's their problem, right? You can't force somebody to learn about something. But either way, Bitcoin's going up. It doesn't care. It doesn't care about feelings. It doesn't care about thoughts. It doesn't care about which politician is into Bitcoin. It doesn't care about which politician hates Bitcoin. It doesn't care about if Jeffrey Epstein created Bitcoin or funded Bitcoin. It doesn't matter. None of that matters. All that matters is that people want it, and it's the best store of value in the world. It's better than stocks. Stocks have certain risks that Bitcoin doesn't. It's better than real estate. Real estate requires maintenance. You can't just hold on to it. You can't set it and forget it. With Bitcoin, you can. If you have 4 more years, you just buy Bitcoin, put it in cold storage, don't look at it again for 5 years, it'll very likely be up. And you'll just have to do no maintenance. You'll have to do no repairs. You don't have to deal with tenants. You don't have to deal with realtors. You don't have to deal with property taxes. All of that is gone. And again, that's another thing. If, let's say, for example, if we found a way to get rid of property taxes on real estate, if we found a way to get rid of repairs and maintenance on real estate, that's not going to happen. What's the possibility of that? Zero. You can't do that. If all of that happens, maybe Bitcoin goes to zero. But again, the chances of that are like 0.0000001%.
Yeah. Tell me about the landscape in Canada and how it might be different from your vantage point than the US.
To be honest, I don't think Canada has any plans to buy Bitcoin. Um, Justin Trudeau actually didn't like Bitcoin, and I think a lot of people just listened to him and they blindly said, "Okay, we don't like Bitcoin either." I don't really know too much about the Canadian politicians. I know that Pierre Poilievre likes Bitcoin, but again, after he talked about it, it went down, so a lot of people started hating him. And it's just like the normie way of thinking. I don't think Bitcoin is going to be accumulated by everyone. Not everybody will interact with the base layer. There isn't enough block space for everybody to interact with the base layer, and that's perfectly fine. The people who buy Bitcoin later are going to have less Bitcoin. But let's say, for example, if somebody gets into Bitcoin at $10 million, they're still early because they're able to exchange their fiat currencies, pieces of paper, for Bitcoin. To me, Bitcoin's going to infinity. There is going to be no price that somebody will be like. There's going to be a price that nobody will be willing to give away their Bitcoin for that amount of dollars. And that every price gets to that point. At one point, we had a penny for a Bitcoin, then we had $1, then we had $10, then we had $100, then we had $10,000. It kept going up. But who knows? Maybe we never go below 30,000 again. Maybe we never go below 60,000 again. I don't know what those numbers could be. But because Bitcoin has a finite supply and people are just buying it and locking it away, the amount of Bitcoin that's available for sale is decreasing, and the price can't go lower than a certain level. So just I don't really know too much about what the Canadian politicians are thinking, but I know that eventually they're going to need to bend the knee to Bitcoin.
That's right. Everyone eventually will need to bend the knee,
Yes.
including people who've just, I think Bitcoin has suffered a little bit from being associated with some scammier type crypto projects, right? If you've got meme coins that are failing or people are getting wrecked or rug pulled, and people just we use a heuristic that is like a shortcut to understanding things, and if Bitcoin is labeled as a cryptocurrency and these other things are cryptocurrencies, well, if a friend I know got rugged or got wrecked on a trade, well, then all that stuff must be garbage. And that's I kind of lament that sometimes, that there's been so many projects out there that have kind of obfuscated the Bitcoin story. So it's it's definitely our job, and anyone listening, I'd encourage you, it's part of your job to spread that story and talk to people about Bitcoin, because it can be an unrewarding task. A lot of times, we talk to our family maybe at Thanksgiving or around the dinner table, and it doesn't hit home. Our friends don't understand it, but for every several failures, there's you're reaching someone who does understand Bitcoin. As Rajat said, there's plenty of opportunity to create content, whether that's online or offline. Certainly a lot of ways. I do want to jump back to strategy a little bit. So just thinking about it's been face melting the amount of capital they've raised in the past 2 calendar years, Rajat, and this year. They raised over $20 billion in 2024. They raised almost $25 billion in 2025. They were the largest equity issuer in all of capital markets in the US for basically a couple of years running. Were you surprised by that number as you've kind of followed Michael Saylor for the past 5 years? And why or why not?
I don't I don't know if I mean I didn't like it at first because I didn't quite understand what they were doing, and I had MSTR and I thought, oh, this guy's just diluting the stock. But I think he mentioned something about how it doesn't matter if they issue shares, the market sentiment matters more. So when the market wants the price to go up, it'll go up. When people start figuring out what Bitcoin is, demand will outpace supply. That's exactly what happened with STRC. So I think STRC is teaching me a little bit more about markets and teaching me more about the ATM. At one point, even though Strategy was issuing shares constantly, STRC went to $100.18. And that's crazy because Strategy was just, they couldn't issue enough shares to bring it back down to $100. So now the market's doing the opposite. The market can't buy enough to bring it back to $100. And eventually it will. But again, it's market sentiment is the most important thing. So what Strategy is doing here, it scares a lot of people. They think, oh, he's diluting the stock. He's diluting the stock. But once sentiment picks up again, I think Strategy is probably going to go much, much higher and much faster than Bitcoin does. So I still own the stock. I have no problem with it. I have it in a locked-in retirement account. It's money that I can't touch anyways until I'm like 55. So I'm going to leave it there. I'm just not even going to touch it. I know that I'm giving control of my money to somebody like Michael Saylor. I understand his vision. I see his vision. Most people don't see it. And I'm okay with what he's doing. I'm okay with him selling more shares and no, he's not really diluting my ownership because the amount of satoshis that my shares are exposed to is increasing over time. So I'm okay with what he's doing. My shares are worth more in satoshis, and I'm okay with more people basically getting to take advantage of his vision. For all we know, he's just in the capital raise phase of becoming the biggest financial institution in the world. They could issue all kinds of products. They could create a Bitcoin layer 2. They could do whatever they want to, and they could have the most liquid platform in the world. And maybe they'll collect fees from that. I don't know what they'll do. I don't know how they'll make money, but I think that owning more Bitcoin is never a bad thing. And they've found a way to keep accumulating more and more. So I fully support what he's doing. I like what he's doing. I'm okay with, and I probably didn't expect it at all actually in the beginning that he'd be able to raise so much money, but now I'm not surprised seeing how he's laser focused on accumulating more Bitcoin, and I like that vision. I like that strategy. I like that they're not changing that, and to me that gets all the respect in the world. So I think he will continue to do what he's doing. He'll continue to accumulate more Bitcoin. I actually think he's going to get to a lot higher numbers than most people predict.
Yeah. And as MSTR shareholders, I think, it's kind of fun. We get to run back some previous Bitcoin cycles because he's trying to make the company be more volatile than the underlying Bitcoin, right? It is amplified or leveraged Bitcoin returns to the upside and downside. And I think MSTR is going to continue to be the dominant story in Bitcoin, at least certainly by mainstream press. So it's going to be really fun to see what new FUD the Bears cook up and how Saylor pivots. He's built that really strong cash position. Like you said, he's got 2 years worth of dividend coverage. And I was talking with Adrian Morris on a recent podcast episode, and he was saying he just sees that number growing. And that was something it took me a second to be okay with Saylor putting so much of a melting ice cube on his balance sheet that is the US dollar. But it does dispel that FUD. It does dispel those bear cases that Strategy won't be able to pay their dividends if he stacks more and more dollars on the balance sheet. And I think that's really important when you are running a strategy like Saylor is doing. Right now the mNAV on the multiple of net asset value on Strategy is sitting near 1.0. So they're trading around basically the Bitcoin minus the debt on their balance sheet. So for someone who understands this valuation, Rajat, do you see this as a gift or an opportunity to acquire more Strategy? How do you think about mNAV as sentiment and buying opportunities, or as you look to invest potentially in Strategy or maybe another Bitcoin treasury company?
I think it's definitely a gift. The 1x is basically like you're going back to when it was like 3x when Bitcoin had a third of the Bitcoin. So they just basically, I think it was, I don't remember who said it, but basically it's like they work through that mNAV multiple and they use it to buy more Bitcoin. They basically bring it down by, they liquidate it, they liquidate that premium to buy more Bitcoin, and eventually they go back to the spot where they were before. So the way that I look at it, I think the cash position. I was actually making YouTube videos about the cash position. All you need is Bitcoin and cash. I have this video. A lot of people really liked it. They found value in it. And basically, it was just explaining why you don't need stocks, you don't need real estate, you don't need bonds, you don't need any of that. All you need is cash and Bitcoin, because cash is the least liquid, or sorry, the most liquid. It's the least volatile, whereas Bitcoin is the most volatile and it's the least liquid. So you have this portfolio, like not what I mean by liquid is that, let's say, for example, if you want to sell it in a month, the chances of you being down and up are probably exactly the same. Maybe like 60% chance that you're up, 40% chance that you're down. So you're basically gambling the shorter with a shorter time horizon. So what you're doing is, if you have cash, you can take more risk, because if you have, let's say, a year's worth of cash, you know that you have a year's worth of cash and you can pay for your expenses, and you can invest in things that take a year to work out, to build something. And maybe in that year, like, that's exactly what strategy can do now. Maybe they can create more products, maybe they can take more risks because they have a year of 2 years of cash. And maybe because of that, it'll allow them to buy more Bitcoin. And worst case, let's say Bitcoin does go to like 8K. They have $2 billion where they can buy Bitcoin with. And I don't even know how much Bitcoin that works out to, but they can buy a lot of Bitcoin with $2 billion if Bitcoin goes to 8K or 5K or 3K. They can clear up the market, like they can double their position. And I think that's a great way to go. I'm perfectly fine with their cash position. I actually like it. I think that they can use it to grow their business, and to me that's awesome. So the mNAV, I think that it'll eventually go up, because the way that I look at it, they have 760,000 Bitcoin today. The way that they're buying Bitcoin, I think they can get to like 2, 3, 4 million. So let's say they get to 4 million, that's like a 5x from here. So technically, the mNAV should be 5x.
Yeah. 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 When you're adding Bitcoin per share, it's a really great way to look at it. Yeah. And, so you've said throughout this conversation, the market cap of stocks, real estate, gold will eventually move into Bitcoin. We've already seen some sovereign wealth funds allocate to the Bitcoin ETFs, allocate to strategy. Um, you know, we've got a lot of Bitcoin treasury companies custodying and adding Bitcoin to their balance sheets. Tesla has some Bitcoin on their balance sheet. Figma IPO'd, in the past 18 months, and they just were like, surprise, we've got some Bitcoin on our balance sheet. I think we'll see more and more of that, and I think you'd probably agree with that. When do you think is the tipping point when a CFO, maybe of a traditional S&P 500 company, gets fired for not putting more Bitcoin on the balance sheet? How long does this take, Rajat?
I think that eventually Bitcoin's probably going to be so the way that I look at it right now, why would a company want to buy something that's worth less than them? I think that's how they think of it. So they think of, okay, our company's worth $5 billion or $5 trillion. Why should we buy Bitcoin when it's only worth 1.4? But I think when it becomes normalized is when Bitcoin is the top asset in the world. Maybe it stays below silver, but let's say below gold. So let's say it gets to 10 trillion. The next highest company is at 8 trillion, and gold is at like 60 trillion. Maybe that's when it becomes normalized, because Bitcoin is then the second most valuable asset in the world. Eventually, it'll be the most valuable asset in the world. I don't know how long that'll take, but I think that's when companies normalize owning Bitcoin on their balance sheets.
You've got me bullish for sure, and your content always gets me fired up. Tell everyone where they can find your videos, where they can follow you online, Rajat.
Absolutely. So I run a private community, Retire with Bitcoin. It's on School. You can check that out. I have a YouTube channel, just my name, Rajat Soni. Rajat Soni Finance, I think it is. If you just search my name, you'll find me. And then I also have an X account where I post all day, every day. I have fun doing it. Just roasting all the gold bugs, roasting all the people who said that we're early to silver at $125. Um, roasting all the people who constantly say Bitcoin's going to zero. I love it. Follow me everywhere. It's a fun conversation, and a lot of people like to book one-on-one meetings with me. The link for that is in the description of all my videos on YouTube.
Awesome. And we'll put all those links in our description as well. And if you're not following Rajat on X, you've got to, guys. It's the best. It's a fun time. If you ever want a good laugh, if you ever want to get bulled up, Rajat's the guy, the feed to watch. And one thing thank you so much for the time, first of all. And one thing I have all of our guests say before they leave, Rajat, is stay orange.
Stay orange.
Thank you so much, ladies and gentlemen. The man distilling the difficult topics, making them simple for the everyman, Rajat Soni.
Appreciate it.